Someone can just let me know when we're live. Thank you. So the time is now 2 o'clock, and I'll call the Tuesday, June 21st, 2022 Committee of the Whole meeting to order. I'd first like to acknowledge that we, the City of Fort Saskatchewan, is located within Treaty 6 territory and Métis Nation of Alberta Region 4, the ancestral and traditional territory of the Nahiawak, Dene, Blackfoot, Saulteaux, Nakota Sioux, and Métis. We acknowledge the many First Nations, Métis, and Inuit peoples whose footsteps have marked these lands for generations. It is because of our treaty relationship that we can live, work, and play on Treaty 6 territory. The first item on our agenda is the approval of the minutes of the May 17th, 2022 Committee of the Whole meeting. Mayor Ketcher.
I'll make the motion that the minutes of May 17th, 2022 Committee of the Whole meeting be accepted as printed and circulated.
Thank you. Is there any errors or omissions? Not seeing any. Close the motion. Please cast your vote.
Deputy Mayor, if you can ask Councillor Harris if he's in favor, please.
Councillor Harris, can you verbally say your vote, please? Councillor Harris, just so you know, we cannot hear your audio. Do you, can you just nod? Nod for yes, thank you. All right. And that's carried. Thank you very much. We don't have any delegations registered to speak today, so we'll move on to presentations. Item 4.1, Amsc Insurance Services, City Insurance Coverage Overview. And I believe we have Barry Latter and Kate Walzak presenting. And you guys, I believe, have about 20 minutes.
Yes, thank you very much. We'll be presenting today on insurance and risk management services. My name is Kate Walzak, and I'm the insurance consultant with Alberta Municipalities. And I'll be presenting today with Barry Latter, Director of Insurance Brokerage Services. I've been with Alberta Municipalities for just over 9 months. I have about 10 years of insurance experience, and it's been a pleasure servicing our members as a part of Alberta Municipalities. And I'll let you, Barry.
Thank you, Kate, for the introduction. My name is Barry Latter. I'm the Director of Insurance Brokerage Services at Alberta Municipalities. I work with a full membership. I've worked in public sector insurance for over 10 years, working with reciprocals, schools reciprocals, public sector reciprocals, and am the one of the marketing bodies that approves and works with the reciprocal arrangement. So I'm here to answer any questions as we go through and give you a high-level overview of how the Reciprocal Insurance Exchange works and how it benefits the city.
All right, thank you, Barry. So for on the agenda today, we have we're going to start with talking about Municipal and how it works, and then I'm going to provide an overview of the insurance program for City of Fort Saskatchewan, and we'll end by going over the additional services, value-added services offered by Insurance and Risk Services team. So I'll hand you over to Barry, who will talk about the Munich Reciprocal.
Thank you, Kate. As I go through this, if there are any questions, please feel free to jump in. The Reciprocal Insurance Exchange can be a little bit confusing at times, but I'll try to make it as straightforward as possible. So what is a Reciprocal Insurance Exchange? Essentially, an insurance reciprocal exchange is the bringing together of a number of equity stakeholders, in this case we call them subscribers, who join together to form a pooling arrangement for their insurance and risk management needs. So it's built up and it's owned by the subscribers. In this case, these are the policyholders and the members of the Alberta Municipalities Insurance Exchange. Kate, could you just flip to the next slide, please? So when a subscriber becomes a member of a reciprocal exchange, they enter into what we call a subscribers agreement, stating they will contribute to fund the losses of the other subscribers.
Can't hear you. What?
Sorry, can you please repeat? Oh, sorry.
Thank you.
So they'll contribute to the fund of losses of the other subscribers in the exchange. So they're effectively committing to claims being paid for losses suffered by any member of the group subject to the agreed upon policy terms of that exchange. If a loss experience is not anticipated for the year, subscribers can benefit by receiving a refund or continue to further build what we call a surplus. That surplus accumulates inside of the reciprocal for what we call future bad loss years. So it's essentially investing in the future, and it is up to the reciprocal exchange, which is us, Alberta municipalities, also similar to an insurance company, to monitor that surplus and then utilise that surplus in the best manner in light of our membership and the exchange as a whole. We have effectively built that reserve, that surplus, to quite a high level due to what we're calling current hard market conditions that we're faced with in Alberta, primarily due to the high number of catastrophes that we've seen and the payouts thereunder. Just for an example, how conservative we are with the surplus, there's something called it's a confidence test. It's called the minimum capital test. And to be able to form reciprocal, the federal government, the Insurance Act requires that we hold what we call an MCT of 160%. That's what we call a solvency ratio. So how much we hold in reserve to cover unpaid losses. We're actually at 500%. So we've held on to that. We've seen in other instances where there have been other reciprocals that have paid the dividends out annually. Yet those have folded over time because there was lack of focus on the sustainability and the long-term fluctuations that we've seen in the insurance marketplace. So turning to the diagram, you can see that the reciprocal exchange, the attorney in fact, the reciprocal exchange is the insurer, and with Alberta municipalities we actually are a licensed brokerage as well. So one of the stages that is not included in the diagram is the brokerage stage, wherein we control the premium and the premium distribution and then creates individual policies for our members based upon what we call their risk and exposure. So in simplified terms, the reciprocal exchange acts as the group insured, which is owned by the subscribers, City of Fort Saskatchewan being one of them. They're equity holders within the reciprocal, and they are able to draw down on the dividends over time if they're looking to move out of the reciprocal arrangement. What happens is the reciprocal exchange from the premiums that are paid in and the surplus contributions that are paid in, those are considered the premium, and the policy wording is created and then claims are paid out thereunder. Now, in the order of under the order of the Insurance Act, we are required to have an attorney in fact. The attorney in fact is essentially a third-party body that manages the reciprocal in view of fair agreement and fair management. It cannot be the reciprocal itself. For the attorney in fact, there is a management fee that is built in as part of the premium payment, and for that we receive management services. The attorney in fact is also supported by key individuals within the membership, so it is still a member-driven vehicle with input directly from members themselves and some of our larger integrated municipalities. So with the reciprocal exchange and the attorney in fact, it really is a vehicle that is built specifically for municipalities and is governed by municipalities with oversight from the reciprocal exchange. For example, the attorney in fact may agree that there is a certain emotional need to make a change to the reciprocal exchange, and they have rights over and above us as the reciprocal exchange. You'll see the bottom box there as well relates to the cedants, which is the passing on of the risk exposure to excess markets. Excess markets are markets that are there for what we call catastrophe losses, large losses, wildfire, flood, large hail damage, wherein the funds and the surplus created within the reciprocal exchange may not be sufficient to pay out high severity in claims. So the severity being, for example, Fort McMurray wildfires. We need to be able to keep the reciprocal exchange running, fully functional and fair to our members. So we do rely on outside insurance and reinsurance to cover those large losses. One of the good things about operating under reciprocal exchange is we govern the policy wording in light and to the benefit of municipalities, community-related organisations, and are able to provide better coverage and better premium for grouping those members together. So with that knowledge, as a specialised vehicle, we're able to advocate on behalf of our members for improved wording. We're able to advocate in terms of claims and be able to create products that suit the public sector environment. Also, with the Alberta municipalities reciprocal, there's added benefit of additional public sector focused risk management, claims advocacy, as we've spoken about previously, and again, lowered premiums due to surplus contributions, which offset any increased premiums that you would see in the open market, which is the private sector market. We have seen in a few arrangements where we have had members that wanted to look outside the reciprocal. Our pricing, because of that, is much more competitive. One of the biggest differences that I can outline, and I previously mentioned, is the subscribers are the equity holders. We're not working with shareholders. So any premium dollars that are created in the surplus don't go to executive bonuses or stockholder dividends. There's no incentivization to raise prices to increase those profits or the shareholder value, which helps to keep our insurance premiums low for our members and again build that surplus for when those natural catastrophe events occur. That was about it for the reciprocal part. I mean, some of the benefits that we can look at again is there's no profit margins. We have control over claims and our operating costs. We don't have external vendors or shareholders that we are looking to satisfy. We have direct input into how the reciprocal is run, and as an association, we do heavily work with our members, our representative members, to create that input that folds back into creating further member benefits. Another thing that we're able to do outside of the private sector is we have further access to the wording, as we discussed, and to international excess and reinsurance markets. We do partner with the largest multinational brokerage worldwide, being Marsh Canada Limited, who are able again to add additional benefit to not only the premium and the coverage, but also to the additional services that we're able to offer. If I have any questions, please let me know. We'll answer them at the end of the time for Q&A.
What do you guys want to do? Do you want to, let's just wait till the end. We'll just wait till the end. Yeah, that's where we usually go. So thank you though.
Thank you, Kate.
So this simplified diagram shows us the structure of your insurance program. At the bottom in gray, you can see the Municipal reciprocal. Then above in the yellow color, we also place excess coverages, which sit on top of the Municipal reciprocal. Aside from that, we also place the aggregated coverages for all of our members. So these coverages are arranged for a group of members. And aside from that, we also place, in cooperation with our partner brokerage Marsh, we also place specialized coverages for our members. And I'll just provide a little bit more explanation to it. So we know that the Municipal Reciprocal is at the heart of the insurance program, and it includes the base coverages, so your property, your liability, and auto physical damage. Then on top of the base Munic's layers, so in other words, coverages, we place excess coverage. So then we have excess property, excess liability, and excess physical damage. Aside from these coverages, as I mentioned, we place other coverages for a group of members. So an example would be crime policy, which is arranged for all our members, or equipment breakdown, again, which is arranged for a group of members. And then in addition, when our members have specialized needs, then we place individual coverages just for individual members. So City of Fort Saskatchewan has, for example, cyber liability coverage, which was placed just for you, and also drone liability, which was placed just for one of your drones. And this diagram shows the insurance program for City of Fort Saskatchewan. So I'll just briefly go over the structure. From the left, you can see the first column. I'm not sure if I can show it. This column. So we call this a tower. This is your property tower. At the base of the tower, in the gray color, you can see the base coverage through Reciprocal. That's your property coverage with the base limit of 3 million. This is per occurrence limit, and your annual aggregate for all members is 12 million per year. On top of the base layer through the Reciprocal, we place the excess coverages, which I mentioned before, in cooperation with Marsh, and these are placed through excess insurers outside of Reciprocal. So you can see that you have three excess layers. The first one, 50 million, then again another 50 million, and the third excess of 112 million. So if we add it all together, we have 212 excess property together with the base limit for property. Your total property limit is 215 million. So if there is a need to place additional excess coverage, then we can also arrange that through the open market. To the right, we can see there's the aggregated coverage, the terrorism property, which has been placed for all members. And the limit is 5 million per occurrence. The aggregate for a year is 20 million. Another aggregated coverage is equipment breakdown with the limit of 215 million. That's for your valued equipment. And typically it matches the property limits. To the right, we have what we call liability tower. So the base limit for your third-party liability is 5 million. And then we have 2 excess coverages on top of that for 5 first excess and 10 second excess. So your total limit of liability is 20 million. The 2 excesses of liability also sit on top of your non-owned auto and auto policy. So the total limit for your non-owned auto and auto coverages is also 20 million. For your automobile liability, you do have 5 million, as I mentioned, for third-party liability. And for physical damage, this coverage is primarily provided through Munic's Reciprocal, and the limit is 250,000. And then we place also excess coverage for this. There are 2 other aggregated coverages arranged for all members for the program, which is crime with 250,000 limit, and environmental liability policy with 2 million. And we have those 2 coverages that were placed just for City of Fort Saskatchewan, the drone liability and cyber liability. We do have a program for all members for cyber liability. However, we recommended placing separate coverage, which provides you with broader coverage and higher limit. And your insurance risk services team provides you with insurance, risk management, and claims services. So Barry and I, we are members of insurance team. We work all closely together, so we talk to the risk management and claims on daily basis. As a part of the insurance team, we do service day-to-day needs of our members, and we service the needs of City of Fort Saskatchewan. We do issue certificates of insurance. We answer your questions regarding your insurance coverage. We process additions, deletions to your policies. We also keep you updated of current risks, and we provide updates as to the insurance market. In addition to that, we work closely with Marsh, with our partner brokerage, to arrange the aggregated coverages, the specialized coverages, and one of the examples of the recent work that we did with City of Fort Saskatchewan, that was arranging the user group policy, which is liability for your facilities. So we have a new program which was arranged also for you. In addition to that, we provide professional advice. So we do contract reviews. We review new ventures for you. Recently, we've been asked to provide drafts for bonding requirements for your contractors, and we worked closely with Marsh, again our partner brokerage, to provide these bonding requirements to you, and I understand that that has been used. And just overall, we manage all the coverages that are listed on this slide. So all the Munic's coverages, the aggregated coverages, and the specialized coverages that are needed by you. So for the risk management team, they provide building valuation and loss control program, which allows us to determine the replacement cost for all your buildings. We do that in collaboration with Suncorp Valuations, and by year 2026, we're going to review buildings for all our members, buildings in excess of $250,000 in value. So I believe that we just contacted Tammy to arrange the valuations for the City of Fort Saskatchewan, and that will be scheduled for the second part of this year. And for the building valuation, as I mentioned, that helps us to determine the replacement cost. Then we update your replacement cost on your property schedules, which helps keep the values up to date. In addition to the building valuations, the reports also include risk control recommendations, and our risk management department helps you with reviewing these risk recommendations and working to meet all these recommendations. So last time we did the valuations for you in 2017, and at that time we evaluated, I believe, around 30 buildings, and for these upcoming inspections, we have about 40 buildings that will be reviewed, and some of them will obtain those loss control recommendations. So our risk management department helps, again, to review and work on meeting the recommendation, which helps you to improve your risk management status overall. We also provide risk management meetings, including fleet loss control meetings with our risk department. We've built an extensive library of inspection checklists, so we share them, and you can use them for self-evaluation of your pools, of your rec facilities, and other facilities. We also offer access to our casual legal services. So this is a call or an email to our legal services team that I believe that the city used in the past. And also we offer free access to e-learning modules, which any of your employees can access. There is a extensive list, as you can see, but just to mention a few, there's cyber security awareness training, which we recommend for everyone to see. It can be used as a part of your cyber training and cyber crime prevention. And just to finish, of course, our claims department, they provide in-house adjusting for the Munic's policies that we've seen, and they also help with coordination of the claims that are submitted for the policies that are outside of the reciprocal, and they support you through the claims process at every stage of the claim process. So that would be all for me. Thank you very much for your attention, and if you have any questions, we're happy to answer them.
Thank you very much. I know I had several questions that were answered within your presentation, so thank you for your thorough report today. Going to tap out of the screen. We'll open it up for questions now. I have Councillor Kelly first, if I can get it. Yep, go ahead.
Thank you both for being here today. You're right, it's complicated. It's not quite like my home insurance. So you referenced the program surplus at being 500%, which is 3 times larger than I think the federal mandate. Put that in dollar value for me, please. How many dollars that 500% represent?
Councillor Kelly, I'll have to go back to refer to that to get the specific number and pull that from the attorney, in fact.
Can you give us an approximate? Is it 100, 200, or
I
3 billion?
I don't know what it is. I can't give you an approximate, but I can confirm quite soon after.
Because my next question to that would be what portion of that is Fort Saskatchewan's surplus? So if when you answer one, if you could maybe try to address both.
I can tell you how the criteria for paying back.
Hold on just 1 second. Your mic is not on. Can you push the button? Yep, there we go.
Yeah, sorry, I think I was holding it.
That's okay.
I can dig into that when I get back, and I can make that presentation with more finite detail. I can discuss how we return surpluses, the criteria surrounding that. It is within a 5-year rolling basis up until the point of retraction from the program. So that would be the premium contribution of the individual less the losses over those 5 years that will come to your member equity. So it is on a contribution basis. If you are a larger reciprocal, you can expect to have a larger surplus return. You won't be divided by 820 members of all varying sizes. That wouldn't be equitable and that wouldn't be fair. Yeah, that's equity based upon 5 years as of the date of recedence as an active member. So, for example, if the city decided to not be an active member for 2 years out of the previous 5, it would still be only calculated out of those previous 5, so it would only be 3 years of contribution. So that's something to be somewhat aware of as well.
Okay, thank you. Are different municipalities rated differently when it comes to assessing premium, or are we pooled together and treated equally?
Each individual municipality is rated on its own exposure. We do have what we call a base rate that is determined by our actuarial. They will give a base rate for municipalities of a certain population base, but then we build it out thereon based upon your assets, based upon your individual loss experience, based upon also some political factors as well. For example, if you had a heavy loss year, the subsequent year, although the base rate and the build-up rate would determine you have to pay, XYZ premium, we wouldn't want to penalise a member that is having a heavy loss year, and we would water down that increase over the following years. That's one of the other benefits of the reciprocal and having a surplus, is it allows you to have that flexibility to operate in such a structure to be able to share the losses and not have to make good the premium in year 1.
In terms of a variation between a high-risk municipality and a low-risk municipality, what would the percentage difference be in terms of total premium for the year?
That's quite a broad question to answer. I think in terms of the difference in determinants, you do get, there are, I wouldn't say a penalisation, but no credits are assumed if you have heavy loss experience. So if you were a high exposure location with high assets, you would be levied a higher premium over time. Also, it depends upon part of the surplus that you've built as well within the program. So between the rating difference, the loading, I think for last year was about 12 to 15% for loss ratios in exceedance of 50%. But again, I'd have to run it individually for the city to be able to give some foremost determinants.
So then, based on that, you wouldn't be able to tell me right now where Fort Saskatchewan sits in that rating pyramid?
No, I wouldn't be able to take a snapshot at any one time. It is in fluctuation, dependent upon claims that are moving through. We do have some claims, I believe, open and in reserve. So we'd have to see how those develop over time, and then we would redo that rating ahead of the renewal period, being the Jan 1, 2023 renewal.
Lisa, I got follow-up questions. Come back to me, please.
Sure, no
Thank
problem.
you.
Councillor Abatoye?
Thank you for your presentation. So the Munic's Reciprocal program, is that a program you've always run, or is it something that's new?
It's something we've run for quite some time,
okay.
Yes.
So I'm asking that question because I'm a bit familiar about risk management and how insurance works, and the reason why premiums will go up or higher than usual is because you see a higher frequency in claims or severity. So I think one of the reasons you're sitting in front of council is because we saw a jump in our insurance premiums in last year. And is that as a result of claims from the city? Because because I've heard you talk about how, it's really based on municipality by municipality, right? So are we seeing a huge jump in our claims? Why our premiums higher? Or why were they higher in the last year?
So there will be three reasons supporting that. The first, outside of loss experience, but there has been some loss experience improvement in terms of increased losses this year. Can you confirm that? Are we higher on losses? The other two factors are, one is inflation and cost of materials. There will be you'll also be looking at the marketplace. So when we look at public sector or larger commercial insurance, the rating is based upon not only the individual loss experience, but what the market is experiencing as a whole. The doctrine is the losses of the few paid by the premiums of the many. In this instance, we have seen quarter over quarter increases in property of anywhere from 15 to 20% for good loss experience. There has been a major capacity crunch within property, property being the main driver or the largest premium spend for any one municipality or insured. And that's being driven again by natural catastrophes occurring around the world, a shortage in capacity as we've seen, an economic shortening and reduction in insurance investment, which often hedges or reduces down the volatility of insurer results. So that's the claims versus the premium they've earned. Many property insurers have been running for the past 2 years at what we call a loss or a combined ratio, which is losses plus expenses, at over 116%. So for every dollar they collect in premium, they've been paying out $1.16 in claims. Underwriters are taking a stern view on underwriting guidelines, and they're looking to return back to profit so they can continue to operate in the marketplace. We've seen that correction. That correction over the past 2.5 to 3 years. It's known as a hard market, where the claims are higher than the premiums paid in. And there is a shortage of what they call capacity. The grade of the risk has to be very high to even get insurance. And that's where we come in as a body to advocate on behalf and then work with our individual assigned representatives to paint a better risk framework picture for insurers. And again, we have also applied, I would say, I applied some of the surplus to help water down those premiums. For example, some of the premium comparisons that we've seen for mid-size to large size, we call tier 1 to tier 2 municipalities and community-related organizations for property, we were seeing increases of 20 to 30% for good loss experience in the private sector, where we're posting results around 15 to 20% for good loss experience. So again, we're able to weather somewhat of the storm of the open marketplace. But yes, very astute. It is. We're in a hard market cycle. We are seeing some change. Marsh just sent us their Q2 reports, and they're looking now at this quarterly change at 10 to 15%. But I would warn that the property market is only one of those markets that are affected by hardening market, increased claims versus the premiums being paid. Cyber being a primary focus. It's very hard to even gain coverage for municipalities at the moment. Directors and officers continues to be somewhat of a challenge, and we're actually seeing general liability rates akin to the increases we've seen in property of about 15 to 20%.
Okay, thank you. I feel like you just buried me with lots of details there, but thank you. But to my question though, so about claims in Fort Saskatchewan, have they been higher than usual? Now, other than the market factors, which will obviously always play into these types of things, have our claims been higher than usual, or they've been pretty stable? It's just a yes or no question.
Yep.
Answer.
Yep. Without having the claims run directly in front of me, I can't comment. But in general conversation, for our members of our tier 1 members, we have seen an increase in claims.
Okay. All right, thank you. And just my second question. So and I was thinking about this last week. Fort Saskatchewan being so close to heavy industry, are there specific types of insurance that we should have? I was just thinking about this last week, like thinking about what happened in Beirut and just other places in the world. Do we have specific, or do we require a specific type of insurance to cover our community as a result of the nearness?
You do carry a very healthy general liability limit. I believe it's 20 million total tower, which is sufficient for industrial risk. We also have EIL as well, EIL component. So you have EIL as well. So if there's any concerns with regard to sudden and accidental or overland or even excavated pollution, you have coverage for that as well. The limit's quite resolute, and it was increased as we moved to another marketplace from Markel to Zurich 2 years ago. You have 10 million in the aggregate versus the 5 that you held previously.
Okay, so EIO will be what?
Is environmental impairment liability.
Okay, all right, perfect. Thank you.
Thank you.
I'm just going to jump in with one question. This one I think is more to you, Mr. Fleming. I was just curious, do we have anything insured that's not covered by this?
I'll ask Ms. Booz to help me out with that one.
We have one other policy that wasn't covered through this presentation, which is the volunteer fire insurance.
Okay, awesome. Okay, Councillor Blizzard.
Hi, thanks for the presentation. I like the idea of the...
Oh, sorry. Can you hit your button again? Apologies.
She didn't like that question. I like the idea of the reciprocal insurance. That just sounds like a way to maybe save money for all the communities. But are there risks with that? Like, what if all Alberta has, some major event and we run out of money? What would happen then?
Absolutely. That is a very poignant question. Now, the question is twofold, really. It comes back to the maintenance of the surplus. I have had experience of other provincial reciprocals wherein they have paid back the dividends on an annual basis based upon the requests and the pressure from the members, whereas we have held against that. there is always the potential for widespread natural disasters. It's usually isolated to one area, as we've seen, Calgary with the flooding, Fort McMurray wildfires and the flooding. The reserves that we have built up were still not would still be covered within the current surplus that we hold, and that is what the reciprocal does do is enables us to cover the risk at the first portion of the risk, which is often the most expensive, and then send out the excess to reinsurers and to excess markets to cover off that excess. Now, what happens if the surplus and the MCT is not maintained properly and the dividends are paid out annually? We saw the dissolution of a reciprocal only a year and a half, 2 years ago, wherein there was pressure from the members and there wasn't the oversight or the risk management sophistication or a strong attorney, in fact, that was able to push back and say, no, we need to maintain for when the market crashes. My experience as well is when that does happen, or in this instance, the government of Alberta has stepped in to provide surplus aggregates, which is the first portion of the risk that is paid, to extend that slightly to be able to water down any premiums of having to go to those excess markets to cover those large losses. So there are really a lot of benefits to being a reciprocal member. We will, and just to develop that question further on, where we do have, there is a lot of focus on members that would have continual frequency losses. Those are generally avoidable. For example, lots of slips, trips and falls outside of government buildings because the snow clearing hasn't been done in time. We will start to question as the losses come up, do we have the conversation, give an extra year underneath the reciprocal, and then have those discussions about releasing them from the reciprocal, because it's our focus to maintain the health of that group, as it is to ensure that there is a fair access to those reserves and that surplus, that claims are being paid in the right manner.
I guess this only works if most communities buy in the province, right? I mean, it wouldn't work if there was 3 cities. You probably wouldn't have enough of funding. What are the deductibles? Does it work kind of like house insurance? Is there deductibles on different categories or not?
Yes, there are. Yeah, the deductibles, I would say, in my experience of working in both sectors, are vastly lower than what is available in the marketplace. We have seen an increase in deductibles, especially around hail, for members that do have large hail experience. 2 of our municipal members were hit quite heavily 2 years ago, and those deductibles do go up because, again, with hail, it's a natural catastrophe. You can't really completely take it off of the books, but there are mechanisms with deductibles to be able to hedge the increased cost in premiums to cover those losses. So yes, there are deductibles throughout.
I have one more question. Just Councillor Kelly mentioned about the different factors that come into play for how much we pay. You didn't mention, but does it also go by like your location, floodplain, hail? That you might something you could possibly mitigate?
Absolutely, yes, yeah. It does. Yeah, it's that's right. Sorry, I need to break things down. We work in we have a lot of specialist terms, acronyms. Part of the exposure, as I call it, is your essential risk profile, and that will be location data that feeds into that. If you have, for example, I know that the city of Red Deer, they have a large corridor of industrial units through the Red Deer River. That's essentially close to a higher exposure floodplain event, but they have been able to prove that they've put sufficient risk mitigation efforts, berming, flood response protocol in place, which is something that insurers do listen to, and we go out annually to either by web conference or directly to Lloyd's of London, who are the major supporter of your property tower, to get in front and really push home the what I call the grassroots information that we're able to collect and show them versus the loss experience they see on a spreadsheet, and the what we call the catastrophe maps, or the pieces of software where an insurer has gone around and said, well, this is high exposure, that's high exposure. It might say that they're on their CAT maps, but that may not be the experience at the local level.
Thank you. That's all.
Councillor Kelly?
Yes, thank you. My question revolved around what you were just discussing. So if I understand you correctly, your organization or Lloyd's of London looks at the risk exposure on a municipality by municipality basis. Who actually does the legwork there?
That's it's a three-prong approach. We work with members to help them to identify risk exposure during our pre-renewal, our renewal meetings, and our follow-up stewardship meetings. We collect that information together, and we work with Marsh, who will help to, with their buying power and their ability to place business directly with their preferential contracts into Lloyd's of London with other domestic Canadian insurers. They will wrap that up to put it in light of the feedback that they're receiving directly from underwriters, so that they can best sell it to the marketplace in conjunction with the qualitative stories that we're able to tell in engagement with our members.
And I could be wrong, but what you described to me is essentially a reactive approach rather than a proactive approach. The three-pronged approach where you ask the municipality to identify the risks, you don't know what you don't know. So I don't know how that works very well. Help me understand, put my mind at ease, please.
Absolutely, Councillor. So we help to flesh out those risk requirements through series of questions, series of meetings, risk management protocol frameworks that we either have you currently enrolled in, or that we develop with you as part of your own set of requirements. And we will sit at the beginning of the year during our pre-renewal process, or at the beginning of the insurance year, from June, August onwards, to determine those questions and those responses. And then when we have that information, we start to build up the current risk profile, and we can start looking towards proprietary products that may assist, or on the other side, over insurance within a certain area. If you carry too high of a general liability limit, general liability was much cheaper during the soft market 3 years ago, and it may have been a continuance, and you might be paying higher and higher premium. We want to make sure that's brought down to a benchmark level of your peers. So it's a top-down approach. We're not here to continually, increase premiums, to increase products, increase services. We're here to be able to fit the need with the requirement, and then scale back that requirement as needed.
Now, I know this probably doesn't fall within your bailiwick, but let me share a thought if I have time here. Part of my immense frustration with being an Albertan over the last decade or 12 years is the natural catastrophes that this province has faced. Each and every one of them, though, in my humble opinion, was foreseeable. So whose job is it to foresee these catastrophes before they happen? And I know it's not specifically yours, but in a perfect world, how would we stop this going forward?
The general doctrine of insurance is there is no ability to foresee natural catastrophe losses. It's at the will of what will happen. But based upon the insurer and the broker and ourselves as the reciprocal, it is incumbent upon us, once those claims happen, to put in risk management strategies to mitigate that risk going forwards. That's part of Daniel, who is the manager of risk management. He creates the opportunities to improve those risks. So when we go to visit your locations and your sites, a risk control survey and assessment is performed. Out of that assessment, there will be additional follow-up requirements to bring that exposure or that location up to a standard. Once it reaches that standard, those risk requirements are removed. and we're able to show that to the insurers as part of the qualitative presentation for each renewal.
And I understand it's not completely your job to answer that question, but when you build in the middle of a forest, I know fire is a primary risk. When you build in a floodplain, I know that it's only a question of time till there's a flood. So do you visit municipalities with a broad forest approach and take a look at those systemic risks that are inherent in the municipality and advise and or incentivize by premium adjustment to get those municipalities to pay attention to what's going on?
Absolutely, Councillor Kelly. And as part of that is more of in a soft market where there is an abundance of premium, abundance of coverage available. We are able to do that. At the moment, in a hard market cycle, it's about being able to maintain the capacity, so your limits as much as possible. And then when the market turns, we're able to translate those improvements, risk management improvements, into premium credits and premium savings.
Okay, I've got a couple of questions, but I see Mayor Catcher. Come back again, please.
Absolutely.
Thank you. Okay, Mayor Catcher.
Thank you. So my question comes around with the provincial government has stated now, if there's been a catastrophe, a wildfire, and you rebuild there, they will not insure you or they will not provide emergency funding or I guess insurance. So would you ever consider that with municipalities to say that, rather than just raising your premium, if it's inevitable, the catastrophe or the flood's going to happen every few years, we're just not going to insure that?
If it's already, there is a moral duty. If the location is already on the schedule when we pick it up, we do need to look at every opportunity to insure it. If there are any standout locations in discussion, we can certainly have that discussion post. What the way that an insurance quote or renewal is structured is we insure everything. We have a duty to be able to insure all the exposures and then work with the member to carve those back, to remove locations from that schedule. So you have a full understanding of what the coverage would be if all items or locations are covered. And then we can scale that back based upon requirement. But then we have to sign various documentation and move through an acknowledgement form that either insures them at a lower valuation or removes them from the schedule completely. Beyond that, if you're looking at building new locations within a floodplain or within, right in the middle of a forest without setbacks, that's more in the realm of working with the developer and the contractor. That's when it starts to fall outside of insurance.
Okay, and I guess the second part of that question, so as the provincial government puts into effect that they are not going to provide funding for these for a second time, do you believe that that's going to increase your liability with municipalities, not personally, but for buildings or infrastructure?
Not for the foreseeable. The surplus is there. We haven't seen the effects of the change, or the upcoming change in legislation, affect what we hold within surplus and what we hold within our books. But it's certainly something to keep an eye on as we move forwards.
Okay, and then last question. So when you talk about the surplus, so if you've got 2 or 3 municipalities who are ongoing offenders with these items, do they not receive greater benefit than those who are being more proactive?
Yes, those that are being more proactive will have better consideration in terms of rates and the overall renewal. Those that are what I would call, I don't want to say repeat offenders, but have this frequency, are not resolving their risk requirements after risk control. That's when we start to look at the health of the program and have tough conversations as to moving them along to have standalone coverage.
Okay, I'm good. Thank you.
Thank you.
Thank you, Councillor. Oh, I pushed something wrong. I apologize. Councillor Kelly.
Thank you again. When you get back to us with information, please try to indicate where Fort Saskatchewan falls in your overall risk assessment, whether we're at the low end of the spectrum or the high end or the middle. and maybe if possible 2 or 3 lines. I don't want a book, I don't even want a paragraph on what we could do to improve our situation or our lot in life when it comes to insurance premiums. When it comes to Fort Saskatchewan's policy in particular, you mentioned you're planning, I think, within a couple of years of doing an appraisal for the 40 or so buildings that the city owns. So the policy, is it on every time the city adds a building, is the policy limit increased for that building, or do we insure for a blanket and fit whatever underneath there? So let me try to explain by example. When I insure my automobile, I get a payout for what the vehicle's worth today. When I insure my mobile trailer, my holiday trailer, I insured it for $45,000. And 10 years down the road, as long as I'm insuring it for $45,000, if it's damaged or stolen, I think I will get $45,000. So rather, are we a blanket, or are we by individual asset and coverage?
So first, I'll answer the question about building valuations, and those will be done this year. We just contacted you to schedule these probably in August. So your buildings will be visited and the reports will be delivered this year. And I believe that all 40 locations will be visited this year. And whenever you add a new building, we ask for replacement costs of the building. So that's a cost of new without deduction for depreciation. So what you would pay if you wanted to rebuild today. And we add it to your total insured values. And then how the property policy is rated is based on the total insured value. So that cost of that building adds to the total insured value, and that's how we rate the policy.
Super. And if you could, the deductible that Fort Saskatchewan pays in case of a claim on City Hall, for instance?
I don't have the numbers in front of me, but from what I remember, it's as Barry mentioned before, the deductibles under the Reciprocal are very low. And the first base layer of $3 million is through Reciprocal, and the deductible, from what I remember, is $1,000. The highest
How much? Sorry?
$1,000.
1,000?
Yes.
That's incredibly low. I carry a higher deductible on my personal stuff at home. Why wouldn't it be higher then? Why wouldn't the city of Fort Saskatchewan have a $200,000 deductible? It seemed to me that's also an incentive to keep your act together as well.
We do work under the reciprocal arrangement with a singular deductible for property. That's called an anyone loss deductible. We have to keep that commensurate across the policy. However, for specific perils such as earthquake, fire, and for hail, we will rate those individually because those are more predetermined to be part of a larger loss. I did also just want to preface something that Kate touched upon with regard to insuring to guaranteed replacement cost for your locations. We can also at any time move to an agreed valuation basis. So if you have an aging piece of infrastructure that you think you'll be phasing out over time and you're happy with the valuation, or you disagree with the external valuation, you are able to agree within council, gain acceptance and insure to a level that you're comfortable with sign off. We also understand that the valuation process that we go through, often it comes at an increase year over year due to inflationary factors, but that's not always acceptable to the budgets that our members face at that time based upon that property. But most certainly, there is flexibility within that. The anyone loss deductible is at 1,000, but I think based upon polling for the new year, the 2023 renewal, we could certainly look at creating some flexibility within that deductible. I'd have to talk to the attorney. In fact, I'd have to talk to senior directors, but it is a worthwhile question. But mostly we see that change outside of the anyone loss 1,000 deductible, more so to those cat event deductibles, the hail, fire, and the quake.
Super. Thank you, folks. Appreciate it.
Thank you, Councillor.
Mr. Fleming, did you want to say something?
Just to the chair, there's a couple questions that have been asked that we do actually have the answer for. I don't know if Ms. Booz wants to weigh in. Then we don't have to do the follow-up.
Through the chair, I just wanted to touch on the increased deductibles. On the renewal last year, we did do a review at possibly increasing our deductibles and see what the premium changes would be, and it barely made it at any change in our premium at all, but it was only looking at increasing to 5,000, not 200,000. That's part of self-insurance where you'd want to be building a reserve to protect yourself for larger claims in the event that occurs.
Was that the one item you wanted to address right now? Okay, thank you very much. Thank you very much for being here today. I think we're going to hear a little bit of follow-up from you guys, and we greatly appreciate that, and I hope you enjoy the rest of your afternoon. We have the next presentation. It is virtual. Did anyone want to take 5 minutes? I'm not sure how long the next one's going to take before we can get a break. Okay, so 5 minutes okay, or do you want longer? Yeah. 5 minutes. So the time is 3:01. So, you know what? I'm just going to say 3:10 to make it easy. Okay? Thanks. Okay, the time is 3:10 and I'll call the meeting back to order. Looks like we're live. Yes, good. I got a thumbs up. All right, our next item, 4.2, residential zero lot line development. We have Adil Kodian, Board of Directors from Canadian Home Builders Association, presenting virtually. Can you hear us okay, Adil?
Yeah, I can hear you. And how about you? Can you hear me?
Great, we can hear you as well.
Okay, I'm going to just quickly share content here.
And you have about 20 minutes.
Okay, perfect. Is this here? Thank you very much, Mayor and members of Council. My name is Adil Kodian, and I'm here today on behalf of the Canadian Home Builders Association, where I serve on the board of directors. I'm also an executive vice president with the Rohit Group of companies, where my team builds about 1,000 homes across 12 municipalities across Canada. Thank you for welcoming CHBA Edmonton Region to present this afternoon on the topic of zero lot line development. The CHBA Edmonton Region is a not-for-profit organization representing more than 400 companies in the Edmonton region. The residential construction industry is a network of local businesses that represents more than 39,878 jobs, 2.7 billion in annual wages, and 5.3 billion in annual investment in the region. We build and develop in large cities, our members do, and smaller municipalities throughout the region. We build greenfield and infill. CHBA here takes pride in working closely with administration and city council and are eager to see more innovative, diverse and cost-competitive housing options such as zero lot lines in Fort Saskatchewan. Our primary advocacy goal here is to ensure that as many people who want to realize the dream of home ownership are able to, and that they have a broad range of housing forms, sizes, types, and locations as possible to choose when they are ready to buy their home. Throughout the region, there is a strong consumer preference for single-family homes. As much as there is interest in semi-detached product, there's interest in apartments. If a consumer is asked to make a choice and what is their singular preference, the number one home type preferred is still the single detached home. But as interest rates rise, for many families, mortgage approvals are harder to obtain. It's not just a case of increased interest rates. There is also the pressure of increased costs for the builder and for the land developer in producing a home that is affordable. One way of addressing the pressures of increased costs is to create smaller lots that offer single-family houses at a lower price. Zero lot line development comes down to slightly reducing the width of a lot on one side, typically by about 3 feet compared to the same lot in today's zone. The savings primarily are attributable to essentially the reduction of 3 feet in the side yard from what would be a comparable traditional lot with 1.2 meter side yard setback. Reducing 3 feet of lot width can potentially reduce the price of the lot between $10,000 to $15,000 depending on the price of the lot. This slight reduction in size has an outsized impact on the cost of the home. The $15,000 is enough to have a meaningful positive impact on the ability of families to realize their dreams of home ownership. Sorry. It's important to note that the final price of the zero lot line does vary based on several factors, many of which are dictated by the homeowner. Zero lot line products can be designed to fit various lifestyles and consumer preferences. This is an example on the right side is a zero lot line that's an estate home. It's a wide, shallow, or it's a streetscape home that has a shallower lot. It's wider at the front, but it is still one example of a zero lot line used to design a semi-estate and estate homes more affordably. On the left side is a entry-level single-family home that is also a zero lot line. On the left side is a rear detached with a detached garage, and on the right side is a front attached garage. So zero lot lines does not always therefore mean entry-level homes. The secret sauce to a zero lot line is that it uses the technical advances in fire rating and home design to reduce the excess land and resources dedicated to side yards. Technical and design advances mean that there is very little negative trade-off for the end consumer to gain this benefit in terms of efficiency. The final cost savings of the zero lot line, as I mentioned, would vary based on the size and style of the home, customization of features by the home buyers, and location. Ultimately, zero lot line development opens the door for greater housing choice for current and future residents. The City of Fort Saskatchewan's Municipal Development Plan sets a new and exciting vision for the future of the community. CHPA-ER appreciated the opportunity to be involved as stakeholders as this plan was developed and strongly support the vision. Our members are eager to work collaboratively with administration and council to realize the goals of this plan. We're pleased that housing affordability is one of the plan's key pillars and that there is citywide policy direction to provide affordable, inclusive, and multi-generational housing. The plan also sets direction to introduce a variety of housing choices to meet the needs and preferences of residents at various stages of life. We share these goals. We want to see Fort Saskatchewan as a community with greater choice. Creating more choice and more affordability in Fort Saskatchewan will require a concerted effort by administration, council, and industry working together. There are a number of factors that influence housing affordability. Mortgage rules that restrict the purchasing power of the end customer, the income of the potential buyers, the location of the home in terms of proximity to work, proximity to school, proximity to recreation, and so on. It's also important to note that the proximity to other basic needs also factor in where people where they decide where they want to live as a result of when they're making their home choices. In the last 2 years, home prices in Fort Saskatchewan and generally everywhere in Alberta have increased quite significantly. This is a Canada-wide story. Some of it is due to unprecedented demand, somewhat caused by COVID, but also all the supply chain challenges, all the labor challenges that have essentially created a supply chain imbalance, causing some of these price increases. To put this in perspective, what does that mean? For every $1,000 increase of the cost of a home, a few hundred people are priced out of the market. Input costs are going up on the land and the home construction side. So it's really important to figure out how to use precious resources like land and construction material more efficiently. From a consumer preferences point of view, this is not a surprise. 94.6% of home buyers desire ground-oriented homes. What's being built is not exactly matching the consumer preferences because a lot of restrictions get rolled in, such as affordability, availability of land, availability of zoning, and so on and so forth. The housing stock in Fort Saskatchewan in this table, housing affordability in Fort Saskatchewan is already somewhat challenging. This table, which is taken directly from the new municipal development plan, highlights 41% of households in Fort Saskatchewan are unable to afford a single detached product. Zero lot line development is a way to lower the proportion of households living in unaffordable single detached homes in Fort Saskatchewan and enhance the city's affordability together for this one product class. If Fort Saskatchewan wishes to achieve its goals of providing diverse and affordable housing options, there must be a shift towards offering types of products that people want at a price that they can basically afford. Providing more affordable ground-oriented detached product with private amenity space will also increase the city's ability to compete with it for more share of the new growth in the region. While the city already has ample employment and recreation opportunities that make it an attractive community, this is a way of providing the most preferred way of housing at an affordable price. Enabling a greater range of lot and housing topologies can provide greater choice and affordability. And as you can see with this table, most regional municipalities have already made the choice to permit zero lot lines. Notable exceptions are Spruce Grove, who's looking at a pilot project right now for zero lot line, and Fort Saskatchewan currently being no in most zones. Our members are experts in market demand for housing. Builders want to offer customers the broadest range of housing choices in the city. Speaking from my experience, our customers who purchase zero lot lines come from a variety of different backgrounds. As I mentioned, there's young families, first-time home buyers looking for that affordable solution. There's also home buyers who are looking for that semi-estate solution, who are moving into their second home and are making choices around, I really don't want the side yard and potentially a chunk of the backyard that I'm not really going to maintain or use. I don't really have the kids that want that particular backyard and so on. So lots of different solutions to lots of different consumer requirements that essentially come in. And zero lot line developments make the purchase of a single family home an achievable dream for more and more people. The benefits of zero lot line in the context of creating choice and affordability cannot be understated. The product aligns Port Saskatchewan to better respond to market trends as every other municipality is sort of going through this path. I'm just going to skip this. Our ask is relatively simple. We want to work together to achieve the vision for Fort Saskatchewan as set out in the new MDP. We want to see Fort Saskatchewan as a community of choice and affordability. To do so, we need a conventional district to respond to the demand for zero lot line housing. We're committed to providing our time and expertise to work together with administration and council to find the best way to welcome zero lot line developments to Fort Saskatchewan. CHPA-ER would also be pleased to host a tour with Mayor and Council to showcase existing zero lot line products within the region of all different types. And not taking any more of your time, thank you all for your time in listening to our presentation. I'm open to questions.
Thank you very much for your presentation. I have a question that I'll start out with. Sorry, I just lost my train of thought on that one. Thank you. I remembered now. So you talk about the different ways that that can affect the price of a zero lot line house and how they are a more affordable option. But what we're hearing within our own municipality is that there's no proof of that in Fort Saskatchewan. So we've had a pilot project here, and when we take those hard numbers, those factual numbers, and compare them to other products, we are not seeing that affordability argument standing up. So I guess, what would you say to that?
So, so it's an interesting comment. The costs reduce objectively the cost of the home is reduced between $10,000 to $15,000. How much of that cost is translating into retail price? That is a very complex question. And I would argue that a pilot project is relatively difficult. So let me give you an example. During the pandemic, in some neighborhoods, our costs went up, say, 20,000. The retail price in those neighborhoods go up 25,000. In some other neighborhoods, the costs went up 20,000 and the retail price only went up 15,000. So how much of that translates to the end buyer? That is a really complicated question. It is a combination of how many other competing homes are being built, how many people moved into the market, did people suddenly get raises? Like did average incomes or did the incomes of our consumer group go up? It can be something as funny as nobody could take an air trip for the last 2 years. That essentially translates into a lot more people having down payments saved up. And suddenly everyone is rushing to buy the most preferred product in the market. So I guess the clear way of saying this is, with zero lot lines, what is objectively true is you can reduce the cost attributable to the construction of a single lot. Whether that translates into retail price savings, very hard to say. Depends on a ton of different factors. Across the different regions, as all of these municipalities have enabled zero lot lines, the general price of a new home, like your entry point for a new single family home, has reduced, but it's reducing in concert with the market, which in general may have gone up. I don't know if that answers the question.
Thank you. I will move on to Mayor Ketcher next.
Okay, thank you. And my question was basically on that basis. So what we're being told right now is if you take the existing house that would go on the zero lot line and you put it on a lot that's got a 1.2 on each side of it, what we're being told right now is there's absolutely no difference in cost. So And I know that's basically what Councillor or Deputy Mayor Macon had asked, but so that's what we're being told. So how do we respond to that?
Sorry, so let me understand the terminology. So when we service land, all our costs are proportionate to how wide the in feet the lot is. Every front foot, if I'm buying a lot out in the market, it can range from $4,000 to $6,000 per foot of land. So if I cut down 3 feet of land, it's easy to see how the land itself will cost, $10 to $12 to $15,000 less money. So objectively, all else being equal, the cost of the land is lower by using a zero lot line because the pocket size, or the size of the home, or the width of the home that you're allowed to build is the same. Now, when we build the house, it does cost us a few extra dollars for some of the technical changes, such as non-vented soffits, exterior gypsum board instead of particle board, like for the fire rating, and so on. But that cost is small compared, that increase in construction cost of the home is very small compared to the decrease in construction cost for the land. My argument was based on what does the end consumer pay for the finished home? That's a very complicated question to answer. What does the lot and house cost to produce? If I take the same 2,000 square feet home, one built as a zero lot line and one built as a regular home, objectively, the one built as a zero lot line net will cost less to produce. Whether they cost less for whether the end price to the consumer is lower, that's anybody's guess.
Okay, thank you. Then my second question comes that we're told if we allow more zero lot line homes, there will be less duplexes and townhouses being built because developers will only want to do zero lot lines. How would you respond to that?
So between the zero lot line, so in the, I would say $350,000 to $475,000 home price market, or even $500,000 market, even $10,000 is a significant differentiator. So if you look at the same identical home between a zero lot line and between between a duplex, the duplex has a little bit less land than the zero lot line. The zero lot line has a little bit less land than a regular single family home. So there is still a price difference. In practice, we do not see duplexes. Like personally at Rohit, we build duplexes and we build zero lot lines. There are different consumers who value each. Some consumers value, and there's lots of product variability. In the zero lot line space, some builders are providing, say, a 1,400 square foot single family, whereas you can buy a 1,600 square foot home as a duplex. So no, that's not what is seen in practice. I don't see people stopping building duplexes or townhomes. They target a different consumer base. And at this price point, even a $5,000 to $10,000 price spread is a significant price spread. Like like consumers at the entry level portion of the market may lose their qualification for a home for like $5,000. That's normal.
Okay, thank you. Just my last question, sorry, and I'll keep it very brief as I've kept my other ones. So to your point, though, is for what's going on in the market, what is the preference? Just go back to the preference between zero lot line, duplexes, townhouses. And that's my last question. Thank you.
Again, I think a very complicated answer. If there were no restrictions, consumers will prefer a single family home. But it's rare that there are no restrictions. For example, some of our customers will look at it and say, you know what, the duplex is $10,000 cheaper than the zero lot line. I would rather buy a duplex and then spend the $10,000 to go upgrade the shower, the countertop, the carpet, and go to a gas range. That's their preference. So what is the preference? If there were no restrictions, most customers, as you saw in the chart that I had put up, 94.6% want a single family home. Once you layer in restrictions of affordability and product availability, home availability, you start getting into complicated things like, well, do I want to pay for the quartz upgrade, or do I prefer the fact that I don't have to share a wall? These are all choices.
Thank you. Councillor Nguyen.
Yeah, thanks. Good afternoon. My question just has to do with your slide that's titled "Are Zero Lot Lines Permitted?" So we do currently have zero lot lines permitted, but what you are requesting is that zero lot lines be permitted under an RS district, and that's your preference, right? So, okay, thanks for that clarification. The other slide with the table. Which outlines number of housing. It's a housing stock in Fort Saskatchewan slide. So I think there is an argument perhaps against zero lot lines. I'm sorry, I'll stare on questions here. But so you have the average tax per hectare row, and by the looks of that, the city would benefit immensely more from duplex and townhome families as opposed to any type of single family dwelling, including zero lot lines. So what is the argument to the city as a unit for this type of product as opposed to promoting townhomes and duplexes from that perspective?
So, so if I can understand the question, Councillor Nguyen, it's that building denser product, with slightly more dense product like duplexes and townhomes, would improve the yield of the from a tax point of view. Why would we build products like zero lot lines, which may perhaps offer less density and potentially less value? So the answer to that is, or one of the comments I could make, I don't know if I have the answer, is in theory, if we built everything to max density, that would be great, but no one actually wants that as a housing product. If and we exist in competitive markets. So if as a builder developer, I look at it and say, you know what, I only want to build townhomes because they represent the most profitable solution, and 100% of my community is full of townhomes, I will actually not realize my profit objective because I am not meeting the need for the consumer to have choice. They will simply go elsewhere where they have choices to go get. So in the same vein, I think part of the region-wide challenge is to sort of balance this need to increase the density or increase, in effect, future property tax gains or value of the land, and also balance that with what the consumer actually wants. Like right now, if you look at it from an somewhat imbalanced point of view, just 1 second. Sorry. So if you look at it, where families live today is 85% is single family or ground oriented type product. What more home buyers say they want is 94%. But what is being built actually doesn't match the preferences that the consumer is saying. So we can go ahead and build more of these, but less people here actually want than what's really being built. And that's, I think, where the challenge lies. Yes, it is a valid question, but I don't know if it necessarily means that there will be a net improvement in tax base based on just changing the product type to be duplexes and townhomes and so on.
Okay, yeah, I appreciate that response. Would you say that if a potential home buyer does not find the housing product that is desired upon purchase, that they're moving to different communities to find the neighborhood and the type of structure that they prefer instead of looking at what's readily available to them on the market? Would that be? And there's probably not a concrete statistic about that, but would you say that could potentially be true?
It could potentially be true. The tough part with concrete statistics is how many people choose to make that decision immediately. How many people choose to say, okay, you know what, there's no such home, I'll wait another couple of years. Like there's always switching costs. Sometimes it's in terms of, does the type of home matter? Does the price of home matter? Does the proximity to the school, the amenity? Lots of switching costs exist for people, some in dollars, some not. And there's no concrete way to say this, but yes, in general, if homes become unaffordable in any particular city, people move. People have in the last 6 months, Alberta's windfall has been all of these people coming in from Ontario because no one can afford to live there. Now, we obviously don't see such extreme scenarios here in Alberta in any typical region, but that's one extreme example. Here it's a little milder.
Right. Okay, thank you. I have one more question.
Okay. Councillor Blizzard.
So if price is a concern, couldn't people buying houses opt for lower cost options within the house? Like, I've built a house, well, not me, I've had a house built 3 times, and I've learned that, you know, the value is in the property. You can't change your property once you own it. You can't change the box, the shape of the house, but I can upgrade years down the road to granite or whatever, your jacuzzi tub. So is that not an option? Like 10 or 15,000 in the price of a house is not a ton of options really to maybe cut back on some of the inside stuff, if that's one way to save.
So I'll potentially give 2 responses to that. One is you can upgrade granite for, say, $3,000 inside your house after the fact, if you can do a lot of it yourself. In retail parlance, for most consumers who don't necessarily know how to make some of these changes themselves, it's not actually that cost effective. The second challenge is it comes down to the financeability and mortgageability of the change. Like in some cases, for example, consumers have us, the builder, build them basements because it's actually possible to mortgages at that time. There's a somewhat more challenging if you go after the fact and you start to get a secondary loan on the asset and so on and so forth. Basements, it's even possible, but I don't know how it would work. There'd be lines of credit. There's a more complexity involved. Is it possible for people to choose that option? Yeah, some people do. Like when people are making the choice between buying an older home and a new home, some of the decision-making parameters are exactly that. Should I buy an older home and spend the dollars to renovate, or should I buy a newer home where a lot of these upgrades come from?
Okay, I guess I'm not going to argue about consumers and their wants versus needs, but yeah. The other thing is, you know, you're kind of mentioning the city is stopping this, but I think the city is also looking at diversification. Like we're seeing more single family houses built, and I think it would be nice to have more options from the other side too. So we are getting a lot of things coming before us that's single family.
And that's that's a valid comment. That's more at so a couple of different comments to that. At the subdivision design level, it is the right time to say, you know what, or at the zoning level, there's got to be a certain portion dedicated to single family, certain portion dedicated to slightly denser product like townhome, certain portion dedicated to apartments and so on at the highest density. The challenge is in single family, you can deliver the same single family houses as a regular side yard or as a zero lot line. What the industry is somewhat commenting is today the consumer, there is a significant percentage of consumers, or there are a significant percentage of consumers that do not necessarily, that place value on other things than an additional 3 feet of side yard. So having zero lot lines doesn't necessarily mean that the net number of single family homes go up or go down. That's still a different control. It just allows us to build single family homes more efficiently.
Okay, thank you. That's all for now.
Councillor Kelly?
Yes, thank you. I have a couple questions, and thank you for your presentation. The first one, does the economic principle of supply and demand also function in the new housing market?
100%.
Okay, and I know it does. It's a bit of a rhetorical question, but I understand that the smaller lot reduces costs. I completely get that from a builder's perspective, no doubt in my mind. What assurances do we have that that lower cost is in fact passed on to the consumer? Where's the proof of that?
And that I believe is the tough question to answer. So all things being equal, the reduction in cost sorry, let's talk about a perfectly competitive market from a pure economics point of view. If there were unlimited people wanting to buy houses and unlimited number of houses being produced, objectively, as the cost of production of the home goes on, it gets passed on to the consumer because there's unlimited competition. Unfortunately, we are not in a perfectly competitive environment. There's always going to be supply-demand factors. Sometimes, and I think I mentioned this during my presentation, there are times when we may be able to reduce the cost on the house by $10,000, but we may actually have to sell the house for $20,000 less. So the supply-demand works both ways. When there is oversupply and not enough demand, consumers get more than the discounted costs. When there's not enough supply and excessive demand caused by people looking to move, the pandemic causing people to look for homes where both husband and wife, for example, can have a video conference call, like lots of these kinds of changes. Suddenly, consumers may not get all the benefit or any of the benefit of the cost reduction. From the city's point of view, though, it's the case of making a more efficient product available. Whether that translates into less pricing is actually a secondary concern, which comes down to total supply and total demand. I don't know if I'm making sense. And that's not necessarily something the builder, each individual builder or each individual consumer.
So if I paraphrase your response, the relationship between supply and demand sort of determines the price, and the value or the cost of the lot determines an input cost for the builder. And there's not necessarily a relationship between the eventual selling price and the input cost.
There is a relationship. It is not necessarily a linear one. If input costs consistently are lower in the long run, then eventually price in the long run will be lower.
Okay.
Yeah.
I'm sorry, but I think we're both repeating ourselves. So let me go on, please. City of Fort Saskatchewan administration has held talks with your organization for approximately a year now. The City of Fort Saskatchewan administration has explained their position to council. I cannot speak for council, but I can speak for myself, and I understand their position. Their position seems logical to me. So in 3 or 4 sentences, please, describe what it is that you find or have a problem with the City of Fort Saskatchewan's position on zero lot lines. It's not that we said none, never the case. We just want to have our own say. So please explain in a Reader's Digest version where you have a problem with that.
Sorry, I must apologize. I'm not familiar with exactly all the 1 year worth of discussion that Fort Saskatchewan has had with CHBA ER. The content of this presentation or the discussion points are to talk about a couple of things. One is the benefit of the zero lot line. Secondly, the benefit of introducing the zero lot line as a permitted product type in a general conventional zone. Is it possible to do this as a direct control zone? Yes, but it adds time and effort to the production of these kinds of homes, which somewhat changes the choices that the builders and developers have to make. Other than that, I must confess I'm not exactly aware of the position that has been communicated.
Mr. Fleming, how long ago was it that we had a council presentation on the RS request?
To your worship, I can't recall off the top of my head. I think
sometime this year, though, correct?
Yeah, I think it was earlier in the year. My recollection would be February, but okay. Somewhere around there. And just to clarify too, that the ongoing discussions we're having are with UDI, not the Home Builders Association. So they are two distinct. It was
my understanding that they were both being represented today with this presentation. And if not, I know they talk to each other. So the communication channels, I'm sure, are open, and you've probably been aware of the discussions. Listen, thanks, but I think I'm done.
Thank you. And yes, a representative from UDI was supposed to be here and they could not make it. Just before I go to Councillor Nguyen, I will go to Councillor Harris.
Thank you, Madam Chair. Can you hear me?
I can.
Yes, I can.
Good, wonderful. So Dale, what in a perfect world, you're a stakeholder in the whole process of development, given the fact you guys built structures on development land, what would you suggest would be a reasonable percentage of single family lot product in a zero lot line context?
Let me maybe repeat the question so that I understand. You're saying that if there are 100 single family homes approved in a subdivision, how many of those should be zero lot lines in an ideal circumstance?
Exactly, because
Okay.
I think what I'm seeing around Edmonton, the developers are doing nothing but building zero lot lines because the lot yield per net developable hectare is much higher, and the net cost or the net profit off of those lot sales is higher, and I get that. But so in your world, as a stakeholder, what would you suggest is a reasonable percentage for zero lot line against the other zero lot or the other single family lot products that are in our land inventory?
So I don't know if I can communicate so when we design subdivisions, when subdivisions get designed, it's not a percentage of zero lot lines that affects necessarily extraneous considerations like parking and street traffic and all of that stuff. If you look at, some municipalities take up the practice of saying, if you build front attached zero lot lines on one side, you cannot build the exact same product on the other side, because to ensure there's a product with slightly higher side yards to allow some on-street parking and so on. I think the question isn't a percentage of a subdivision that can be zero. It's how is the subdivision designed to allow for the right balance of on-street parking and off-street parking that allows places for the road widths between these width standards between these two blocks and so on. I don't, and these, depending on the subdivision, depending on the length of the block, depending on whether the blocks are curved or straight, the percentages can vary wildly, but you can design very livable community in there. And part of the reason a lot of developers in larger cities are going to zero lot lines is because the consumer is voting with their wallet, that they actually are not preferring the regular product line if given a choice, because they'd rather do other things with the money than have a side yard. Just consumer trends. We're seeing a lot of consumers that are telling us that, my kids are older. I don't really need the backyard. There'll be a nice deck, but beyond that, the backyard's a pain because I got to mow it. Now, it's more detailed and more nuanced consumer preferences that matter. But overall, there is no magic percentage. It comes down to the painstaking art of designing a neighborhood.
I guess I would tend to disagree with that postulation. However, I think that when we as a development authority are looking at a mix of opportunity to create attractiveness in our community, if we went to 100% zero lot line, I think we'd have way too much densification. So that's why I was asking you, what do you think is reasonable? Is it 20%? Is it 1 in 4? What is it? So you've thrown out a lot of extraneous information about the development and building and stuff like that, and I get that. But my question was, what percentage? Because we, as decision makers in our community, have to determine the right mix from an overall policy framework that we work with our development community to bring to the market. And at this point in time, I guess we're struggling with the whole issue of how dense we want our community to be. So that was what the nature of my question was. And if you can't answer that, I totally understand that. So thank you for trying. I appreciate it.
Thank you. I will go to Councillor Nguyen.
Yeah, thanks. I just have 2 last questions here. First question would be in regards to your comments about the maintenance being low on zero lot lines. For the yard, I guess that's how that's taken. So, like, maybe you could clarify for me the attractiveness in buying such a small yard. What I've experienced, and I've been on these properties in Fort Saskatchewan already, is that they're very difficult to access, and it's very difficult to grow anything down the side yards. But there is still landscape architectural requirements for the front yard, and then even being able to transport a mower past an air conditioner is almost impossible. So I think it's going to be creating some issues with maintenance of a smaller yard in this capacity. So how I guess what's the feedback that you have that validates this point?
So I'm just going to use a simple example here. I'm not 100% certain if it is visible. So this is an example that we have pulled up of a zero lot line product. Here's the fences. Here's the 1.5 meter shared or the easement that allows the property owner. The 1.5 meter easement, what do we find in practice? It's plenty of room for the mower to actually get transported from front to back. It's not really a significant concern. From the point of view of nothing growing here, some of our customers, I mean, sure, the sod does grow, but some customers replace it with mulch, some customers replace it with stone. People put paving stones to access the back. In many municipalities, they do allow the creation of a side door in the 1.5 meter easement. So we take some, relatively common sense precautions, such as making sure that the landing over here on the side door doesn't block access to the mower or anything like that. So, what in practice is the concern? Like as a builder, we haven't really noticed a material number of concerns from that point of view in there.
From the builder, yeah.
From the builder or from our consumer, like again, in most markets, including Edmonton or elsewhere, most markets have the choice where the consumer can say, I've got 15,000 extra dollars. I can choose today to go buy a regular single family home with a regular side yard, or I can use that to upgrade my home and do this as a trade-off, like on the inside. Or I can use the 15,000 to, for example, go build my detached garage. The market's telling us right now that most consumers, the vast majority of them, are preferring other things than putting an extra 3 feet of side yard into their home. Doesn't mean all are. There's still choice. It's one of those choice things. There are still plenty of homes built with regular side yards that are still available in the market, but not all. The majority of the consumers are choosing to do other things. In my experience, anyway.
Okay, I appreciate your answer. I'll just ask one last question, which is, so there's going to be likely an increase of older homes that need an update on the market in the mature neighborhoods in Fort Saskatchewan due to an aging population going to be moving out of those properties. So what would be your argument for advocating zero lot lines as opposed to having these types of older homes that are at a lower price point, potentially need some upgrades, are livable, that have a much larger yard if somebody wants that, and a detached product. So what's your argument to inject zero lot lines as opposed to filling up those types of properties within 10 to 15 years?
So I don't know if my argument for zero lot lines is against older homes. Again, if the market, builders and developers are responsive, I think, to the market. And if the market prefers the upgradation of an existing home, and that's what people want because the yards, the trees, there's a lot of good things there's a lot of reasons why people would choose to live in an existing neighborhood and upgrade the existing home to current code. But there's also lots of good reasons why people want zero lot lines in new neighborhoods, and that's what they can afford. The upgrade can be a choice that may work out to be more expensive than the relative choice they have to go to a new neighborhood with zero lot lines. And I guess the comment is one where choice is what we're, I guess, advocating for, and affordable choices. Doesn't mean people won't choose infill neighborhoods. They can. We generally see a mix of both.
Right. Okay, thank you.
Thank you. And I'm not seeing any more questions. Mr. Codian, thanks for being here today. We really appreciate your time.
Thank you very much for having us.
All right, we're going to move on to our next item, 2023 operations budget update. Oh, I apologize. I have been requested for a 5-minute.
Just 5.
Yeah, just 5. I apologize. I thought you meant let's move on.
I expect this one to be
All right, I'll bring this meeting back to session. Next, we have the 2023 operating budget update. Shannon Andruko presenting. Welcome, Shannon.
Good afternoon, Madam Chair and members of the committee. My name is Shannon Andruko, Senior Accountant, Financial Services. The purpose of this presentation is to provide Council with an update on the 2023 operating budget, such as key budget priorities, financial implications being considered for the 2023 budget, and a review of the 2023 budget process timelines. The work on the 2023 budget is underway. Departments are currently working on freeing up resources, reallocating resources, using priority-based budgeting data and program insights. Departments have identified a number of key budget priorities for consideration for the 2023 and the 3-year operating forecast. And the city's leadership team is in the early stages of reviewing these key priorities. Some examples include the RCMP contract increase. There's union contract negotiations, non-union market salary survey adjustment, inflation, and previous commitments from prior years, such as operating impacts from 2022's capital projects, the continuation of reducing MSI reliance on annual capital projects, and the continued dedication to resources for diversity, inclusion, and truth and reconciliation. For more details regarding these priorities, you can refer to the 2023 Budget Update Report. Through our initial work on the 2023 budget, there are financial impacts that have been identified. These impacts include a conservative amount of tax revenue growth increase, which is currently estimated at $1.7 million. This includes projected additional property tax revenues due to growth in assessment for residential and non-residential properties. And additional property tax revenue growth from 2022 will be included in the 2023 budget. The increased cost to city programs due to inflation and continuous growth. There's approximately about $1.2 million in one-time initiatives. And based on our initial results of the budget submissions from departments, there is a projected property tax revenue increase of approximately $2.1 million. As we move through the next months, administration will continue the work on refining the revenue projections and budget priorities prior to the budget deliberations, which will take place in the fall. So for the budget timelines, on August 23rd, an update on the 2023 capital grants will be presented to Council. October 3rd and 6th, the 2023 capital budget will be presented. Departments will do their presentations for operating budget, and budget deliberations will start on November 16th and continue on November 21st, 24th, and December 1st. The operating and capital budgets will be approved on December 13th. As for the next steps, administration will take back any feedback from today and continue the development of the 2023 budget according to the established timelines. And finally, the 2023 and the 2032 capital plan update will be presented next week, June 28th, in the regular council meeting. This concludes my presentation. I'll be happy to take any questions.
Thank you very much. Just waiting for people to weigh in. Councillor Abatoye, you are first.
Thank you for your presentation. So the $2.1 million, so that's what we're looking at for a tax increase. Does that include the 1.3 one-time initiatives, or excludes that?
That excludes the one-time. One-time we usually fund with grant revenue or reserves.
So 2.1 million, that's how much percentage increase are we talking about?
It's approximately 4%.
4%. Okay, thank you.
Councillor Nguyen.
Yeah, thank you for the presentation. I just had a question regarding the library. As they have a new director, and there were some discussions. I'm the representative that sits on the library board, so there's just discussions that they might be delayed in preparing their budget. Have you just talked to them at all, and what would be your policy on granting specifically the library an extension if needed?
Off the top of my head, I cannot remember exactly when the library is due to submit. I want to say it's sometime in August. There's not a whole lot of room for that movement because we've got to really start working on the development of the document and have everything firmed up. And that takes quite a bit of work.
Yeah, understandable. Yeah, thanks.
Thank you. I'll go to Councillor Kelly.
You're right, that was way faster. Shannon, when, and perhaps Troy, when would council have an opportunity to discuss with administration our budget process? I'm looking at discussing the types and methods of making significant motions, for instance. When would we do that? Strictly through notice of motion, or is there a time slotted to talk about budget process?
Yeah, through your worship, we don't typically appear in front of council in open session strictly to talk budget process. So notice of motion would probably be the appropriate way to go about that.
Okay, thank you. And it's going to be, I think, a very difficult budget year. I'm sure you've come to that realization. 4% for this year, I don't think sounds bad, except our citizens are looking at 6 and 7%, and a significant portion of our citizens are truly finding it difficult. So with that in mind, has administration given any thought to some in-depth review of a few, at least, of our programs to determine their value in Fort Saskatchewan in this day and age? And what programs? I don't want to look at snow clearing. That seems to be the fallback. No, I want to look at programs that have the lowest user base and perhaps the highest cost per user and or the highest cost per user. In other words, look at programs that have the smallest footprint within Fort Saskatchewan.
Through the chair, I would say so every year we sit down with the budget and we kind of lay out what's submitted and try to look at what our options are. We don't do anything in depth with respect to specific programs. We spend a lot of time looking at reallocation opportunities within departments to help reduce the amount of new ask requests that come in. In the times when we sit down and look at the city's budget, and I know you have, and all of council considers it every year, you know, when you look at the major areas of program spending, I mean, it starts out with police and then you get things like utilities and the heavier expense areas tend to be the hardest ones to look at reductions from, right? And so you end up, I mean, we've done really well with cost efficiencies in the last few years, but we tend to kind of nibble away, and they tend to be smaller ones and things like that, because finding those, I mean, you have to look at service level adjustments to find real dollars that would create a property tax savings.
And that's exactly what I'm driving at, Troy. If council, theoretically at least, and we've had this discussion before, sets service level, then council should perhaps dig their fingers into those particular tall weeds once in a while and have a wholesome discussion about what service level is really needed in some specific areas. And that's really what I'm driving at when I say, I don't want to nitpick the cost of something. I want to decide whether or not it's necessary.
Yeah, and truthfully, we don't have an internal process with that. Probably leadership from council would be beneficial in that regard. We tend, rightly or wrongly, we tend to be pretty happy with the service levels the way they are, and most of our energy and our efforts tends to be in a growing community like this, just struggling to keep our service levels keeping up with demand, right? So it's not often where internally we sit back and go, should we even be doing this or whatnot?
And sometimes that wholesome review might be worthwhile. Have we had any indication, Shannon, from our two significant utilities, water and wastewater, as to what kind of rate increases we're looking at this year?
I don't have the exact numbers, but the priorities that were put forward, there is an inflation rate, inflation amount, sorry.
Roughly how much?
Um,
Approximately in line with your 4% or lower or higher?
you know what, I'll have to get back to you on that.
Please do. So Troy, just to conclude our last recent conversation, again, back to a program review, you're looking from some guidance from council as well, and a notice of motion if deemed appropriate.
Yeah, through your worship, I'd say any significant discussion around service levels of programs, guidance from council would probably be required there.
Yeah, you bet. Thank you.
Mayor Ketcher? I even did it quick that time. Go ahead.
I know. Sorry about that. So my question's probably more to Mr. Fleming. So over the years, we've switched from service levels and determining what we have and how much we're going to provide, and we've moved to priority-based budget. So walk me through priority-based budget again in determining when you're doing your budgets, how you're determining what's going in, because I thought that was our new process.
Yeah, through your worship, priority-based budgeting is a tool, but it certainly doesn't replace the principle that council sets service levels and then budgets get set based on those service levels. We've actually done a lot of work the last couple of years clarifying what our service levels are. We've worked with all the departments, and the link is on, I was looking at it yesterday for a different reason, but if you go onto our budget web page and go through, there is a link there that has all of the service levels for all the program areas that have been carefully defined. So priority-based budgeting works and again, I was looking at it yesterday for a different reason, but if you look at the capital budget, there's a couple things priority-based budgeting has provided us benefits for. One is there is the scoring system that gives council a bit of insight, and it gives us a little bit of rigor in evaluating individual projects. And then my favorite thing about it is probably the fact that it forced us to do program-based budgeting. So when you go into our budget document now, you can actually see the cost of the programs, which is again a function of the service levels. So I actually think those are complementary processes. One didn't replace the other. We're still very much focused on service levels.
Okay, no, I appreciate that. Thank you. And I guess the other question that I have is with some of our highly subsidized facilities and that, I guess I would just, I hate asking your opinion, the need for some of these within our community to service those maybe who are more vulnerable, can't afford to be utilizing them, but the need in our community to be a whole community.
Yeah, and through your worship, you're right. Giving an opinion on it is difficult because there's really not a wrong answer. I think it comes down to deciding what role we believe the municipality plays in supporting the community in that regard. So, that can kind of come back to your philosophy around how we set fees and charges and what kind of programs we provide and how far do we want to go with that to benefit the community. So, certainly, I do think there's an important aspect of community well-being that relates back to our ability to provide, municipal recreation programs that aren't provided by the private sector. But again, the degree with which you do that would go back to your comment about service levels, right?
Okay, thank you.
I'm going to go to Councillor Harris.
Thank you. I think Councillor Kelly's comments about program reviews makes a lot of sense. We tried it a while ago in the last term and it was not successful for a lot of different reasons. And while I respect that priority-based budgeting is a tool that our administration can use to do good budgeting, I think that there is no substitute for independent third-party reviews of services that really do need to have that vetting in an independent context. We appear to have shied away from that, and I suspect that there will probably not be much appetite to do that. But I think that that's the only way that you can get to the nub of whether or not a program is being operated and run efficiently and effectively in a truly independent context. I mean, our staff do a great job in many regards, but I think they have a bias, which ultimately comes across in the development of an annual budget. And it is incremental in many instances. And I get that. So those are my comments about it. I would like to see, quite frankly, an independent third-party review of some of our major services. And those are the types of reviews that ultimately, we know that we have legislative function to provide some services. We have no legislative service to provide other services. We do it because our community wants it, or we want that type of service. But they still need to be looked at holistically from time to time. And we are not doing that, other than our administration, I think, tries to do the best job they can. And for that, I do acknowledge our senior management, and our city manager has tried to do a good job. But I know other major municipalities have struggled with the same question, and they've put in place major independent reviews of big ticket projects, big ticket services. So that's a sort of conversation we have to have in another time, I would imagine, as a council, to determine if it makes sense. And if it doesn't make sense, I'll stop banging my head against the wall. But that is my take on service reviews. So thank you.
Thank you. I'll go to Councillor Kelly.
Thank you. And what percentage of our budget, net of utilities, so budget without utilities, what percent of the annual budget, or annual budget, is made up or comprised of user fees?
I want to say, I don't know the exact number, but it's in the low percentage.
Okay.
It was we did document it in the 2022 budget document. It's not coming to me.
And that's fine, Shannon. Troy, you mentioned a link. Could I ask? I looked in the budget very recently. I didn't find that link. Could I ask that you provide that to council again, please? But user fees in and of themselves. So there's lots of ways to pay for what we do. And you either ascribe to a user pay philosophy, and the user that gets the economic benefit should pay the majority of the economic cost, or you don't. I happen to follow that belief. So when it comes to setting user fees from an administrative perspective, what is the process that you actually use? I know that we have a policy. I strongly suspect that the policy isn't followed. So what's the process that's actually used to determine, for instance, that we should have a 23% recovery on the cost of harbor pool? That's an acceptable number in our community.
Mr. Fleming?
Through your worship, so we do have a fees and charges policy. I believe, I don't know if there's a policy and procedure, but I know for sure there's a policy. And we follow the guidance within that. The exact way it's done looks a little bit different in all of the different departments, because they do face unique circumstances. Some departments have very few fees and get very little or no cost recovery, and then you get to something like utilities where it has to be a cost recovery at the other end of the scale. So I think there's a different, my recollection of the fees and charges policy says that there's about 6 or 7 things that need to be considered when looking at each fee. So you'll look at comparables, you'll look at inflation, you'll look at your cost recovery, you'll look at a combination of those things, and then make a determination of a recommended change to the fee based on those.
And thank you. The policy in and of itself, and I reviewed it recently, says that those things shall be considered. What I don't understand and what I'm asking is, what does in practical terms, how does shall be considered get implemented?
Yeah, so I recall during the development of that policy, we looked at several different methodologies to try to create a bit of guidance that was uniform across the organization. And the challenge is that the circumstances in all of the different departments were so unique that we couldn't find something that would fit everyone that wasn't going to create a problem somewhere else. So the reason we use words like consideration is that some of the departments would look more strongly at things like inflation and their costs, whereas other departments might look stronger at things like municipal comparables. And so the word consideration, again, it varies depending on the department and the service. So it's not, I know how this sounds. It's not a scientifically, the guidance doesn't sort of require us to do anything, but those are just the things we want each department to look at when making a recommendation.
So I'm going to beat this up a bit more, Troy. Bear with me, please. So market comparables. Do you think there's an active market, a fair market value for something like swimming services delivered by a municipality?
So through your worship, my experience is that we will get compared to other municipalities by our users regardless. And so municipalities often, I think most municipalities when I look, especially for recreation services, they tend to look at what the others around them are doing. And we all tend to sit within a pretty tight range, because if one of us tries to go higher and charge a higher fee, or if one of us is way low, those two things tend to attract a lot of attention both ways, and then everything sort of gets brought into a more comparable level. Rightly or wrongly, that's been how my experience of how those fees work.
That would exactly align with my assumptions too. Thank you, Troy. Yeah, I think we need to have a discussion in council about how that process actually works, but I'll leave that for another day. Thank you.
Thank you. I'm not seeing any further questions, so thank you very much. Next item, councillor inquiries. Not seeing any. We do have a in-camera session today. Can I get a motion to go in camera? Thank you, councillor Nguyen.
Yeah, I'll move that council go in camera for purposes of FOIP.
Thank you.
And I vote in the affirmative.
Thank you. I close the motion. Please cast your vote. And that is carried. So that will conclude our regular session. Thank you.